was choosing my tie, I tried to get something with some green on it.
Yes. For anything.
Yeah. No, I just wanted to ask you to make a guess why I had to choose a green.
Oh, the market is up. It's because the market is up. Well, you will have to have a green tie for a very long time. Oh. As long as I'm here, then you will not wear any other color.
That's a good one. Okay. All right, let's get started now.
Yeah.
Hi, and welcome to the Trading Bell. It's still half-year conversations, and the NSE as well has done its thing. And we're here sitting with Frank Mwiti, the CEO of the exchange. It's been 1 year, 4 months or so, 3 months, 4 months there. And we promised him and we told him we'll put him to task. And this is it now. After 1 year, nobody is forgiven, right? But Frank, welcome to the show.
Thank you, Maina. Thank you for having me.
Always glad to see you. And, on the side, we talked about my tie, green things. There's a lot of good vibe going out there. And I just wanted you to just paint a picture. Even when I looked at your half-year results, remarkable performance over the last 2 years as well. Could you walk us through the drivers behind this and what you feel about it?
Yeah, thank you. First, you're right. I think the year is off to a fantastic start.
Yeah.
On the back of a very good performance last year in 2024. There are different factors driving the current good performance.
Yes.
Part of it, of course, is the macroeconomic environment.
Okay.
We've seen the economy pointing in the right direction. Inflation is stable.
Yeah.
The Kenyan shilling is stable. Our foreign exchange reserves are up.
Yeah.
So based on that, those policy environments, it's created a conducive environment for investments.
Yeah.
As a result, the entities that are listed on the NSE, which represent, the essence of the Kenyan economy, if not East African, have also done well. The majority of our listed companies have announced very good results.
Absolutely.
And similarly, we've seen the reforms and the strategic initiatives that we started last year now starting to take root. So both the policy environment as well as the reforms we've done at NSE and the strategic push we're having to bring more visibility to our market, to make it easier for people to trade in our market, has resulted in really good results for NSE itself, which, as you know, is also a listed company on our own exchange.
We should talk about it as well. I noticed some good numbers
absolutely,
there.
Absolutely. Yeah. And maybe to finish off that point, the upswing in the market, as you know, started last year. So really, this is an acceleration of that momentum. And we can talk in a bit more detail how we intend to sustain that momentum.
Yeah, which is actually my next question. Whether this market upsurge, how do you plan? Is it going to continue and how do you plan to sustain? Do you have some quick thoughts towards that?
Let's start by saying that we are 7 months into, or 8 months into implementing our new strategy for 2025-2029. So by extension, the idea is to implement our strategy because it's working. Keep implementing it and implement it with a lot of focus. And that is really part of what will sustain the momentum. And number two, of course, is we're working very closely with the policymakers on the government side as well as regulators to see what other reforms and initiatives we need to do to enable the market to grow as it is growing, or even to grow faster. To get back to the high levels it was in the early 2000s, but also to surpass that. Because if anything, this market should be one of the biggest. It's already one of the biggest in Africa. But if you consider that the NSE represents companies, or other companies listed on the NSE are doing business across East Africa, not just Kenya. And East Africa is one of the fastest growing regions in the world. You should expect that the main exchange in the region should follow that trajectory. So yes, we are 8 months into implementing our strategy. The metrics that we are tracking for that new strategy.
Yeah.
For example, bringing in more listings, diversifying from over-reliance on trading, bringing more products.
Yeah.
That journey has just started.
Excellent.
So yes, the momentum will continue.
Yeah.
And more importantly also, of course, we want to have more investors in our market.
Oh, okay. That's good. Let's talk about, first of all, a bit of the numbers. First of all, I think you have highlighted about the strong financial performance and all that. And I noticed your half-year results, 177% up.
Yeah.
I think it was about 151.6 million and all that. And I wanted to ask you, because this is now purely under your purview.
Yes.
As I say again, we cannot now say you're a member now.
Yes.
What are the key operational structural changes maybe that you have done that have drove to this sharp turnaround? Because this is not just a small one, this is a big one.
You're right. This year, our total income is up 119%.
Oh, okay.
Compared to same period last year.
Yeah.
You will recall our results for the whole of 2024 were also very good.
Yeah.
I mean, our profit was up 550%. Okay. So, what have we done to get to that level? I should also mention our profit for half year is also up 177%.
Absolutely.
From 54 million to 151 million.
Yeah.
So we are tracking a number that will, in all likelihood, be the biggest profit in NSE's history.
Wow.
Okay, so we are back. I think that's the point. What have we done? Well, the first thing we did last year when I joined is to focus on managing our costs down.
Okay.
Our cost-to-income ratios were not impressive. Last year, we moved it down to 79%.
Okay.
This half year, we've brought it down to 61%. In our new strategy, our target is 40%.
Wow.
Cost-to-income ratio.
Okay.
Which would
Good
compare
traction. Yeah.
exactly, and it should remember we are in the financial services sector. So we really, our comparative should be the cost-to-income ratios of entities operating or companies operating in the financial services space. So to aim for 40% is the right thing to do.
Yeah.
Number two is improving market access. You will recall about 3 or 4 weeks ago, we enabled, we changed our rules to enable investors to buy a single share from the existing rules where you had to buy a minimum of 100 shares of any given counter.
Now you can buy one.
Now you can buy one.
Wow.
And with CMA's approval, the push is now to also have fractions. You can buy a fraction of a share.
Wow.
What that does, Maina, is it means that the market is truly, truly inclusive. Whether you have 1 shilling or you have 1 billion,
you can get it.
You can come into our market.
Wow.
Okay.
Yeah.
And we are seeing already that bringing change to our market.
Yeah.
The other thing is listings, bringing new listings to the market.
Yeah.
For example, in our strategy, we have committed to bringing 40 new company listings by 2029. Okay. Yeah. So we've already listed SKL this year. So we are 1 down,
absolutely.
39 to go. Okay. We also have commitments to list 50 new structured products.
Yes.
We listed Talanta, asset-backed security, 44 billion earlier this year, where the president was here. We've also listed the Citrix ETF.
Absolutely.
So
I was present. I
2 down,
48 to go.
Correct. And then the last thing is we're also looking to upgrade our infrastructure, market infrastructure. So our trading systems, to enable, first of all, to modernize our infrastructure, make it, world class, and at the same time enable more players in the capital market ecosystem to interface with our trading systems. Beyond that, of course, we're also making sure that we earlier this year I reorganized our team to make sure the right people are in the right positions. And also reorganized our go-to-market approach,
Okay.
so that we are able to go to market from a business development perspective in a strategic way.
Yeah.
Again, that has started bearing fruits.
Excellent.
And we've gotten also a lot of support from our primary regulator, the Capital Markets Authority.
Okay.
And we are coordinating also very closely with the other regulator, central bank, given our bonds side of the business.
Yeah.
And working also closely with CDSE.
Absolutely.
And of course, the investment banks and stockbrokers and fund managers and custodians.
Okay.
Of course, for our equities market, it's also benefited from the drop in yields on the government paper. That has meant that investors, both retail and institutional, have started reallocating their portfolios from bonds to equities.
Yeah.
And then lastly, we've also seen increase in net foreign inflows.
Okay.
So telling you essentially the visibility we've brought to our market is enabling more foreign investors to trade our market.
Okay.
And so the profitability, the increase in profitability of NSE, and the increase in market indices, which are all up. The NSE share index is up more than 40. I think it's 44% year to date. Added close to 900 billion to investor wealth. All those things are part and parcel of how come the market is where it is and why you're wearing the green tie that you're wearing and that you will continue to wear for a long time, as long as I'm here.
I love this.
You're watching Trading Bell.
Speaking about the share as well, because I also looked at your share price as well, which has seen some significant rise. You could touch on that, but also the bonds market as well. I've noticed we're about to break history. We have already crossed the 1 trillion mark for the first time. What's driving all this? Maybe you could touch on the share and the bonds turnover as well.
Our share price has done very well.
Over 50%, right?
Over 50% up.
Yeah.
It's been actually one of the best performing shares on our market. So from one time, I sit on this table, then I cross on the other table, and I tell myself that, so our shareholders, they are happy. We had our annual general meeting the other day, and we got very good feedback from shareholders. Of course, my intention is for that share price to go higher than that.
More than that.
More than that, for sure. Because with all the strategic changes we are making, there's every reason to say that we are really, really capturing value for shareholders. And therefore, that share price should be reflective of that. But on the same thing about share prices, I should also mention that almost every single share on our listed entity has improved.
Absolutely. The counters,
both the high value share prices, shares, as well as some of the, shall we call them penny stocks, they have all improved. Hence the reason I'm saying the NSE all share index, which is a reflection of everyone who's listed, is up 44% year to date.
Impressive.
In the past, there has been feedback given to us that our market is not efficient because the share prices are not reflective of the real value, of intrinsic value of our listed companies. There's some truth to that. Part of it is, I think in the past, not a lot of attention has been paid to providing clarifications and engaging with investors on various listed companies, so that shareholders are able to really understand the entities that they are investing in. You will have seen, for example, last year we pushed for listed companies to mandatorily provide corporate action, calendar of their corporate actions, proper investor briefings, filing their accounts, among other things, and also to drive better investor relations. So those things have continued to support some of the improvements that you are seeing in share prices. On the bond side, beginning last year, you will have seen that the government of Kenya, through National Treasury and Central Bank, have been pushing to bring down the yield on treasury bonds and treasury bills, with the intention of having both of them in single digits.
Yeah, that's true. Yeah.
As opposed to the very, very...
There was a time where people were running there.
Absolutely, you know. And then, truth be told, the government cannot possibly survive on...
Sustain all that.
It can't sustain on that high popping, on those high popping rates.
Yeah.
The policies that National Treasury and CBK have been doing to do that, in my view, I think, first of all, it's clear that they are absolutely firm on the intention to bring these rates to single digits.
Yeah.
And those discerning investors who realize that the yield is better in equities, because those numbers, what they were getting last year and the year before on treasuries is definitely coming down, are doing the right thing, which is relocate
Shift.
while you can,
Absolutely.
to equities. Because even that has also affected things like money market funds, who invest, for example, in treasury bills and other liquid instruments. Their yields have also had to come down. Right? You know, I actually believe that's the right thing. Honestly, remember, if our government is borrowing at high popping rates, you and I, one way or another, will have to, one way or another,
all that.
Yes.
Taxpayers.
It's taxpayers. So it is actually not in the interest of many Kenyans. Yes, the government should be borrowing at affordable terms.
Absolutely.
Truly risk-free rates. Because at the end of the day, it's taxpayers that are actually managing that. So I think it's the right policy for sure. On number two, people who take higher risk should get a higher yield. When you invest in a company, you're taking more risk than packing your money with treasury bonds. So your reward should, of course, be higher, which is what our market. So it's telling you the market is working right.
The way it's supposed to work.
It's the way it's supposed to do. Number three, we cannot grow this economy if we don't have deep capital markets. It's literally impossible for the private sector to grow in the absence of quality local capital. Okay? So NSC, we are very, very sensitive to the role that NSC plays in this economy, mobilizing capital for both private sector and public sector. Okay, and we want to reassure the people out there, including your listeners, that we take our role very seriously. A successful NSC is a successful Kenya. We are a barometer of what is happening in our economy. Actually, I would almost say in East Africa, given the footprint our listed companies have across the region. And we've seen a lot of support from the government to make sure that happens. But the point I was making is that the drop in yields in bonds has benefited equities. And I think that will continue to be the case going forward.
And it's good on the overall.
It is the right thing, actually.
Okay. So there's a privatization agenda, the bigger picture. Last time we had mentioned something about it. I don't know what's going down there. And also your positioning globally. I mean, we have had very good things happening, including the 12 companies that were listed at MSI indices, also the Moody's ratings, all those kind of things. What are you seeing? Privatization and global positioning.
Okay. Let me start with privatization. First of all, I want to say that you need support from government for privatizations to happen. Okay?
You're right.
Which we have. The president and this administration is very pro capital markets, hands down. The privatization that I think is in the cards has been seen in the media for a while now is the Kenya pipeline. In fact, I think last month I joined both the Capital Markets Authority and the National Treasury, led by the CS, to make a presentation to the National Assembly, Parliament on the KPC, proposed KPC privatization. And the indications are that this would happen this year.
Yeah.
But obviously, it is subject to a process.
Okay.
And that process is primarily managed by National Treasury, of course, in this case, the Privatization Commission as well, as well as CME and ourselves, and of course, Ministry of Energy, given KPC's home ministry.
Yeah.
Interestingly, initial assessments show that KPC would be oversubscribed. In all likelihood, it will be absolutely bigger than Safaricom.
Wow.
So you can imagine how big an IPO that will be.
Yeah.
We've already gotten a lot of reach outs from foreign investors looking to understand where we're in this process because they want to allocate capital to invest in the KPC IPO.
Yeah.
We should also mention that KPC is very profitable.
It is. It's been recorded in billions. Yes.
3 billion shillings in dividends to the government last year.
Wow. Yeah.
But we think in private hands, it can be optimized.
Yeah.
It will be optimized.
Absolutely.
Look at Safaricom. Safaricom was a government entity. Look where it is now. Kengen was a
government entity as well.
Look where it is now.
Yeah.
It's doing business in Ethiopia, Eritrea, Djibouti, DRC.
Yeah.
Kenya Power.
Same thing.
Same.
Yeah.
I can name quite a number. KCB was a government entity.
And now look
what it is in, I think, 8 countries or so.
Yeah.
So it tells you private sector is truly best place to run businesses.
Yeah.
Of course, with support from government from a policy and regulation perspective.
Yeah.
So the need for privatization should be rather obvious. Okay? It should be rather obvious.
Yeah.
In any event for KPC, the session of paper that was done by National Treasury to Cabinet shows that the government's intention is to retain 35% and float 65%, which means the government still has a
stake.
It has a stake.
Yeah.
Number 2, KPC, the intention, at least from the discussions we've been part of so far with government, is that privatization should also enable actually 3 things. 1, local investors, retail investors as well as to participate. Number 2, foreign investors, a lot of whom are just waiting.
Yes, ready to come.
And then number 3, other strategic partners. For example, Uganda potentially, because KPC is quite relevant to Uganda, given it transports energy to our neighbor there. So they do have an interest. And from some of the conversations I've been party to, there are considerations around how do we allocate or give an opportunity for our neighbors to also participate. If you recall, just to conclude the point on privatization, why this is the time to do it.
Yes.
But 1, government needs money. Number 2, the timing is right because there's a lot of liquidity in the market. The other day, on one of the infrastructure bonds that
was oversubscribed. Yeah.
Number 3, it is KPC will do even better.
Yeah.
And private, you can imagine improvements in corporate governance, improvement in innovation, improvement in public profile, ability to tap further funding for growth without pushing on the exchequer to foot the bill. So this is the right thing to do. Whichever way you look at it, this is the right thing to do.
And we have the blueprint of other companies that you've given.
Absolutely. So that's on privatizations. And of course, there are other entities that have been flagged for potential privatization.
To an investor. There will always be critics in this country, and you have done fantastic work, strategy, everything else to an investor there, especially a retail investor. Tell them why this is the right time. Speak to them now. Yes.
Look, for investors out there, whether you're a retail investor or an institutional investor, foreign or domestic for that matter, the timing can't be any better.
Yes.
When you even interviewed me when I first joined NSC last year, I told you, if you are not getting into equities now, you will be late. Now, there's a saying again. The best time to plant a tree was
Yesterday or what?
40 years ago.
40 years ago, okay.
The next best time?
Now.
Now, okay? So, any investor out there will not in our market. This is the time.
Yeah.
We are reforming the market.
Yeah.
Our strategy is working. We are seeing huge opportunities in the horizon.
Excellent.
This is the time to come to our market.
I love this. This is the time. Thank you so much, Frank, and I appreciate your time. And go bring the billions. Is it the trillions?
Trillions.
There you have it, right here on the Trading Bell. And we appreciate conversations with the head of the NSE, that is Frank Mwiti. And, you know, I hope you took your nugget. If there's a time, it's now. When we started, as he said, this interview, he called on you to enter the markets. And look at it now, all the way, all indices up. So take advantage of the moment and the tide. Thank you so much for your time. I leave you now with the markets.